Good evening, everybody. I want to appreciate you all for being so consistent in this training. Welcome and God bless you all. Today, I promise you that we are going to have another section of this training. And this section of this training we are going to be looking at is really going to be different from yesterday, which is day one. You might be wondering what section we are talking about. Sharing my screen here. This is, we are going to look into pips, lots, leverage, chatting softwares, brokers, types of traders, and we look at the various types of traders. Now, let's start with today's activity. A pip is known as point in percentage, and it represents a tiny measure of the change in a currency pair in the forex market. It can be measured in terms of the quote or in terms of the underlying currency. Determining your profit and losses is an essential part of trading. So let's take a closer look at how pips and spread factors in this equation. Now, a pip is the smallest price unit that an asset can make. A pip is the smallest price unit an asset can make. I have a very simple calculation we can use for pips. And this calculation is very straightforward. Let's look into this. Coming to my screen, I always tell people that a pip is simply coming from basics, and that is 1 over 100, 1 over 10,000. And 1 over 10,000 is 0.0001. Now let's say it extends to probably to 0.00016. This one you see is called 1 pip. And this 6 you see is called 6 pipettes. Now, I need you all to listen carefully. 1 pip is exactly where we make our congratulations. I mean our calculations rather. 1 pip is exactly where we make our calculations. And you might be wondering what I mean by where we make our calculations is when you come here, let's say you have a very simple exchange rate. And the exchange rate is 1.12 500. Let's say you want to add 5 pips to this. So if you put this and this 0, five comes down, these 2, 1, and 1. Can you see? So that means that this will be 1.12550, adding just 5 pips to this. What if I want to add probably 10 pips? So that will be 0, 1.1 to 600. So that's when I add 10 pips. So this is how you add pips to exchange rates. So many people have this big problem of not being to make your pips calculations. But I tell you that when you know how to make your pip calculation, you can predict exactly when you have to exit the market, especially when you are knowing how much you are gaining in the forex market. So that's that. Let's proceed. We're going to talk about yen pair. Yen pair are known as the yen is actually the currency Japanese they spend. So when I mean yen pair, I mean those exchange rates that has JPY close to them. Let's search for them. There are plenty of them. CHF JPY, so on and so forth. So on and so forth. Let's search for yen pairs. These are yen pair is 88.79. CAD JPY, CHF JPY, Euro JPY, ICNX, and lots more. They are very good example of what yen pairs. If I check more, there's so much. There's so much. Look at them. GPP JPY. GPP JPY is a good example of what yen pair. So that is that for yen pair. And one thing I've noticed about yen pair is that yen pairs they don't exceed 2 precisions. When I mean 2 precisions, I'm talking about 89.65, 98.07, 146.89, 144.06. Let me show you what I mean. Can you see? You can see that the pips calculation for yen pair is quite different. How? Normally, yen pair comes with a strategy, which is 1/100, which is 0.01. Can you see? 0.01. So from here, look at the 2 precisions. The pips for this yen pair is 1, 2. So this is the pips calculation for it. Can you see? So that's why I can add any pips. I add 5 pips to this. So that will be eventually 9 plus 5, 4, 216.86. So that is a simple addition of 5 pips based on what? Yen pairs. I say that. So that is that. Pips calculation will be dealt with in the advanced class. There's an advanced class that we're conducting soon, but pips calculation will be dealt with in that class. Let's proceed. Lots. Lots represent the size of your trade in Forex, and it is the number of currency units you will trade in Forex. There are four main types of lots. You have the standard lot, mini lot, and micro lot. Now, let's do a very simple calculation. So, in this way, if I raise my screen, the formula for lot is x over 10,000. So let's say someone has $100 and you don't know, you want to know what your lot size is. That's 100 over 10,000. Zeros cancel zeros. 1 over 100 is what? 0.1. So this is called what? A mini lot. Sorry, it's called a micro lot size. A micro lot size ranges from $100 to $900. A micro lot size ranges from $100 to $900. So meaning, even if you still have $900, that $900 is a micro lot size. That $900 is what? A micro lot size. Now let's look at the next one. The next one is when we talk about $1,000. Sorry, these. Oh, sorry. Oh, it was it actually. It was just small. These two zeros cancel these two zeros. The next one is mini lot size. These three cancels these three. So this is 0.1. So this 0.1 is called mini lot size. And the mini lot size ranges from $1,000 to $9,000. That's a mini lot size. What about the standard lot? The standard lot is 10,000 naira upwards. So I said 10,000. $10,000 upwards. So 10,000 divided by 10,000. So this cancels, this cancels. So this is 1. So this is a standard lot. A standard lot ranges from $10,000 upwards. From $10,000 upwards. That is a standard lot. So, with all I've done on lots, you shouldn't have problem calculating your lot size. Excuse me. You shouldn't have what? Problems calculating your what? Your lot size. Let's proceed. What is leverage? Leverage is result from using borrowed capital as a funding source when you invest to expand your firm's assets. Anything. So that's exactly what leverage is all about. And leverage as it's just like when you say, if you read that place through, you see that they said the use of various financial instruments to borrow capital to increase the potential returns of an investment. Leverage can also refer to the amount debt a firm uses to finance assets. So what happens here is the brokers will tell you that how much you have. You tell them you have $200. That $200 can be seen in the forex market as $50,000, meaning that to you, you are trading with $50,000. Sorry, with $200. But the broker sees it as $50,000. So they boost it. But guess what? They don't do this for free. They either take their spread, their fee from their spread, or they take it from the commissions. Are you with me? So that's one thing about leverage. What you have, you boost just to increase your capital in the financial market. So the statement here is, let me see how to go about that. Let's say you have $200. So your next option will be, my leverage is 1 to 1,000. In you, real life, you are seeing this money at $200. But if I use this 200 to multiply this, in the financial market, this amount is actually $200, not $200, $200,000. Right? So that's exactly what leverage is. So you have a certain amount, you put in the financial market to be boosted for you. But the brokers will never do this for free. Nobody does a free job. You must be paid for everything you do. So that's that. Forex brokers are firms that provide traders with access to a platform that allows them to buy and sell foreign currencies. Transactions in the market are always between a pair of two different currencies. So forex trader either buy or sell this particular pair they want to trade. Now, who are forex brokers? Forex brokers are known as retail forex brokers, and what they do is they provide a platform to us, which is MetaTrader 4 and 5, which you can use to trade in the financial markets. And as I talk to you, there are 1,001 brokers outside. If you are not careful, I am not saying that Brokers, they are not brokers they are not effective. If you are not careful, you make a big mistake. How? You might go and enter a broking firm that doesn't treat you to your satisfaction. Maybe probably the spread is too high, or so on and so forth. A lot of defects. Are you with me? Now, types of brokers. The broker me I use is called Hotforex. Are you there? The broker I use is called Hotforex. And Hotforex has been in existence for so many years. 10 years and above is not a joke. FXTM is another good broking firm. FXTM is another good one. InstaFX is good. TopFX is good. And Apari is good. Are you with me? All of these are top forex institutes. I'm not saying there are not others, and those others are not good, but the ones I've used are Hot Forex, Top FX, Avatrade, so on and so forth. These are the exact trading listing brokers I have used. They are the exact trading brokers I have used. Platforms and charting softwares. Platforms and charting softwares. We have three types of charting softwares, and they are TradingView, Invix, NinjaTrader, so on and so forth. Now, TradingView is a social network for traders and investors on stock, futures, and forex markets. Now, TradingView is exactly what technical traders they use. Technical traders they use TradingView so much. I also use it. In fact, I buy their packages because I do some things on it. Now, I've tried Finvix, but I'm not used to it. Probably maybe I'm used to it. It will go well for me. NinjaTrader. I've tried them too, but I still prefer trading view. Types of traders. Forex traders tend to fit into one of the following categories: scalper, day, swing, position, so on and so forth. So let's take a closer look at which type of traders we have. One, we have the scalp traders. The scalp trader is a trader that trades from few seconds to few minutes. I repeat, the scalp trader is a trader that trades from few seconds to few minutes. And one thing about scalp traders is scalp traders are similar to day traders. Are you with me? Scalp traders are similar to what? To day traders. And one thing about scalp traders and day traders I've always noticed is that they never like to take any trade to the next day. Do you know why? When you take a trade to the next day, you incur a lot of swap fee. You might be wondering, what is a swap fee? A swap fee is a fee the brokers charge you when your trade goes over the next day. For instance, when you trade a trade of $1, the brokers might charge you 0.03. And if you subtract 0.03 for $1, that'll give you $0.97. Are you there? That will give you what? $0.97. So that is one thing about all these traders. They don't like to trade to the next day so that they don't get a lot of swap fee. Swing traders. Swing traders are traders who hold on to trade for a long period of time. No, rather for a single day. What am I saying? A trader will see that a trade, they can also hold their trade for weeks. Yes. A trader will see that a trade is going for a buy. You enter the market as a buy. Going for a sell. You enter a market for a sell. When you have not made your own analysis. That's one thing about swing traders. I never like swing trading. I like to be sure of what I'm doing. Like today, despite the market is bad, I still make my profit. So that's that about swing trading. Position traders are traders that hold on to trade for longer period of time, from several weeks to years. I have a student presently. The guy is a position trader. I think he's a position trader. He does puts trade. He reduces the lot size, and he will just see him trading. I think so. People differ. That is who a position trader is. Algorithmic traders. These are traders that design robots. As a matter of fact, I have designed a strategy right now that if you connect your trading view, I'll connect it to your trading view, you get an alert in your Gmail, and you enter that trade as either buy or sell. When you enter that trade, I'm so sure you will win. But in case of anybody who wants to contact me as regards that, of course, you can chat me. Event trading traders are fundamental and they are very, very similar to them. So that is that for today. I appreciate everybody for being here today. God bless you all. And I'll see you all tomorrow. Please, tomorrow is another practical day. Let's endeavor to be around. Thanks so much. God bless you. See you tomorrow, please, by 9 p.m. Bye for now. Yeah.